How does a double taxation treaty affect Americans in Europe? Imagine living in Europe and earning income from your job or investments, but feeling unsure about how taxes work across borders. That's where double taxation treaties come into play. These agreements are like a map showing which country has the right to tax different types of income. For Americans living or working in Europe, understanding these treaties can save you money and prevent confusion when it's time to file taxes. The United States taxes its citizens on their worldwide income, no matter where they live. This means that even if you are living in France or Germany, you still have to report your income to the U.S. government. But if you also pay taxes in your European country of residence, you might worry about paying taxes twice on the same earnings. That's where the treaties come in. They set rules to decide which country gets to tax what, helping to avoid paying double. Most treaties include mechanisms like the foreign tax credit. If you pay taxes in your European country, you can often use that amount to reduce your U.S. tax bill. For example, if you work in Italy and pay Italian income tax, you can claim a credit on your U.S. tax return for those taxes paid. This means you won't be taxed twice on the same income. Some treaties also lower the tax rates on certain kinds of income, like pensions or investment earnings, so you don't pay more than necessary. But there are some limits. The U.S. and the United Kingdom, for example, have a clause called the Saving Clause. It allows the U.S. to tax its citizens as if the treaty didn't exist, which can complicate things for Americans living in the U.K. You need to check the specific treaty between the U.S. and your European country to see what protections are available. When you earn income abroad, you must report all of it to the U.S. government. The treaty helps you figure out which country has primary rights to tax your income and how to claim credits or exclusions. For example, if you have rental income from a property in Spain, you can pay Spanish taxes and then use that payment as a credit on your U.S. return. If you are retired and receiving a U.S. pension while living in Germany, the treaty will specify how that pension is taxed. Understanding these treaties is key to managing your taxes smoothly. They are designed to protect you from paying too much, but you need to actively use them. Always review the treaty between the U.S. and your European country of residence, and consider working with a tax professional familiar with both systems. This way, you can make sure you are taking advantage of all available benefits and fulfilling your tax obligations in both countries.